Hello, everyone. Thank you for joining our second CFR training webinar session for the 2023-24 fiscal year consolidated fiscal report. Yesterday's session went well and we covered some good topics. We also had a pretty good sized crowd. That session's recording will be posted shortly along with today's session on YouTube. We will send an email out to all providers notifying them of when they are available and where they can be found. Today, we will have over 500 attendees again. So hopefully today's session is just as beneficial for you. My name is Alpa Amin. I'm one of the representatives for OPWDD and will be hosting today's webinar. Today's New York State representatives will be as follows. Representing OSS, Paul Green, Paul Sutton, Lisa Vickery. Representing OMH, Michelle Zielinski, Josh Becker, Sean Griffin. Representing OPWDD, Francis Vasilio, Kenneth Glimbayer, Alpa Amin, Emily Stewart. Representing SED, Catherine Cochran, Ian Harps. Representing DOH, Jeffrey Nicholson, Nicole Miliose. Also, we have a survey that will pop up at the end of the event. We would greatly appreciate you taking the time to fill out the survey so that we can continue to make this training better each time. Session 2 will cover CFR's Web Utilities menu, general and agency-specific changes, highlights, and supplementals, SUPP-1 schedule, claim reporting, DMH2, and DMH3. This slide is important, and hopefully you have had the opportunity to check out previous Q&As that have been posted on OMH website. We strongly encourage all attendees to ask questions through the Q&A function in the webinar. It is on your right-hand side of your screen, and you might have to click the arrow next to the Q&A to open up the dialog box. If you don't see it, click the three dots at the bottom right of the WebEx and then click Q&A. We will not be answering questions today, but plan on answering all the questions and posting answer online along with a recording of this webinar so that everyone can get the benefit of this webinar and the questions asked. CFR contact information. This is always good to know when you have questions. This slide shows how to contact each agency. Most of us are still working hybrid in-office remote schedule. So all the agencies prefer email contact. New York State Department of Health providers may submit questions regarding their CFR submissions by email to DOH email address listed on this slide. Excuse me. Claim contact information. Any questions related to claims can go to the contact listed on this slide. As noted on the previous slide, email would be the preferred method. By end of the seminar, we hope to accomplish the following goals. Provide NYS agency contact information for specific questions not covered during this training session. Identify any major changes that have occurred since the release of July 1, 2022 to June 30, 2023 CFR manual. Discuss important policies, principles, and rules regarding completion of CFR via CFR app web. Help providers become familiar with the claiming and supplemental schedules. I will now pass on the presenting to our first panelist for today's session.
Good morning. My name is Francis Vasilio. I work with the CFR unit at OPWDD. We're going to discuss the utilities menu, which appears on the right, or excuse me, on the left-hand side of the screen, a little above halfway up if you're in the CFRS web. You see the picture here. This is what the utilities menu might look like if you entered it the right way. I get calls all the time, people telling me that they don't have all the options, and that's because they just went straight to the utilities menu without first opening up a CFR through edit mode, either one that's already been submitted or one that's in work in progress. Once you open it that way, you may see it like this. You'll notice that the submit option is grayed out here. There's a couple of reasons that might be. The first one is, and the most likely, is you haven't yet validated and had a DCN assigned. You cannot submit a CFR that doesn't have a DCN assigned. The second reason that might be grayed out is if you, who are in this working on it, weren't given a submitter role by your security manager. The first option off that menu is to transfer from DMH1 to DMH2. So if you're working on a full CFR and you're entering expenses in the DMH1, or I mean CFR1, and revenues and so forth, all that information flows automatically to the DMH1. But if you've got programs that require the claiming schedules, the DMH2 and DMH3, you have to take this step and transfer the information from DMH1 to DMH2. There's another time you need to do this. Let's say you work on the CFR, you're working in the claiming schedules, and then you realize you need to go back into the CFR1 to make a change in an expense line or what have you. After you do that, you're going to have to use this function again to transfer from DMH1 to DMH2, because any changes you make on the previous schedules don't automatically transfer. When you're transferring, you have some options there. You can choose which programs, because not all programs require the claiming schedules. You can choose which programs you want to transfer data over to DMH2. You can, you may have a program that operates in multiple counties. You may need to designate the percentage allocation of the expenses. All those options exist here from the utilities menu. The next option is importing. Some of you larger agencies find it easier to import data from your balance sheet into the CFR. You're first going to have to set up a text file, and then you would use this function here to import. There are a couple of things you should do. Each year, you should confirm that the parameters are the same for the lines you want to import into, that the cost codes haven't changed, that the number of the width of the lines are the same, et cetera, et cetera. We encourage you to use the help feature while you're doing, attempting to do an import, because it can give you some more specific guidance on how to do this successfully. We have had some issues in the past of people not following the proper order of doing an import, or and we've had some problems with the program itself that we've worked on to try to get this to work better. You can also export data from CFRS Web. Let's say you want to send it to a spreadsheet. You would designate which schedule you want to export from, and you hit the export button, and you get something that looks like this with the information coming in. If you're familiar with working with Excel, it's easy to then manipulate this data to make it useful to you and however you want to use it. Let's say you're working in the DMH schedules, DMH3, you've got funding source code in there that is no longer applicable. From the utilities menu, you can go in and you can hit the little garbage can on the right if you want to delete a funding source. If you hit the pencil next to it, you can go in and edit the funding source. And this is where you can make those changes here in the utilities menu. Need to talk to you about the DCN, or the document control number. This is really just a file number, and a number that's attached to your file, your CFR file that you're going to upload to or submit to us. So all the documents that you are going to send to us, the certifications, the CFR itself, as you printed it out, will all have the DCN at the bottom of the page. And the DCN has to match the file that you submit to us. When you, let's say you submit your CFR, then later you get a review letter and you have to make a couple of changes, you're going to also submit some new certification pages along with that. The key with the CFR or with the DCN is to make sure that you print those certification pages after you validated and had the DCN assigned. Every reporting period, we get certifications in that were printed before the DCN was assigned, and it says right at the bottom of the page, DCN not assigned, which means that certification pages are invalid. So only validated and DCN assigned file can be submitted to us. A CFR can be submitted to us. So one of the options off this utilities is to perform that final validations and assign the DCN. And when you do that, you might get a sheet that looks like this, especially if you're not having a particularly good day. So you see there's lots of issues. You see some of them are marked as failures. That means they have to be corrected before you can get a DCN assigned. You see one there, the second one down is marked as a warning. That means you should look at it and make sure that it's what you want, but it won't fail you. It won't keep you from getting a DCN. Most of the time, you'll be able to click on the row for the error that it cited, and it'll take you to the page in the CFR where you can make any adjustments that you need to make. After you've gone through and cleaned up all these failure messages, you would then go back to utilities and run validate and assign DCN. And if your afternoon's better than your morning was, you'll get a confirmation back that looks like this. This says the document control number has been assigned for your submission. In the old days with the desktop, you used to get an email. Now you just get a message pops up on your screen. So now, if you go over to if you go to the look at all your work in progress, You see here, there's one listed that says DC and assigned, but not yet submitted. Some people have made the mistake thinking that once they went through the validation process, had the DC and assigned, they were finished with it, but you have to actually submit that CFR to us so that we in the New York offices and the Albany offices can actually review what work you've done. So if you open up the one that said DC and assigned but not yet submitted, you'll see at the bottom there you got three different options. You can view it, you can go in to edit it, or you can submit it. Now, if you chose the submit button, you see the confirmation that appears on the screen that says has been successfully submitted, and it has the date. If you chose to edit, you'd get a message saying, you know, you'll lose your DCA and you have to validate again if you make some changes. So here, now you're looking at underneath the period of 2023 to 2024, it shows that a CFR was submitted. It gives you the submitted date. Another option off the utilities menu, let's say that you created a CFR and it had 4 different funding agencies from the previous year's CFR. But after you started working on it, you realized that you had gotten too many review letters from Paul Green and you decided not to do business with Oasis any longer. So you're going to have to get rid of Oasis out of that newly created CFR that you have. This is where you can do that. You go in, you check the agency you want to get rid of the CFR information from, and it'll take that agency and all its programming out of the CFR that you've now created. Now, keep in mind that if when you make changes like that, you're going to get this warning, and it says, if you remove it, everything about that agency comes off the CFR that you just created. You know, you brought in information from the previous year, you're going to lose all that from that agency. If you're going to add a state agency, if you check to add one, the next step will be you have to go to the program site definition, and you have to define what programs it is that you have in the for that agency that are new this year. Let's say you went in and you deleted an agency, and now that CFR with those agencies listed is identical to one that's already in work in progress. You can't have 2 open work in progress CFRs for the same period with the same state agencies listed. So you'd get this kind of message up here telling you, you can't do that. Printing. I get lots of calls about printing. First thing is, when you're printing, I recommend you always print the PDF if you've had options and programming on your computer. If you print the PDF, it's easy to go in then and adjust it to print on letter-sized paper if you want to, instead of printing on legal size, because not everybody has printers that print on legal anymore. After you've chosen to print and you've designated whether you want to print to a printer or to print the PDF first, you'll get this screen where you can mark which schedules you want to print. A lot of times now people don't print the whole CFR. They may only need to print those certifications. You see those boxes checked up there. If you have some more specific things you need to do, there are some advanced print options You see some of the examples listed there. For instance, you could just print the schedules that involve one of the state agencies that funds you, or you could just print the information, the DMH schedules for a certain county. That's useful sometimes. If you hit that print button after you selected what schedules you want and it seems like nothing happened, that's when they always call me then and say, the printing's not working. And that happened to me too the first time I tried it. And if you hit the print button at that point and nothing happens, if you look at the upper right-hand corner of your screen, a little icon will pop up that says you have pop-up blocker on. And if you click on that, you can tell it to allow pop-ups for this program. It doesn't mean you'll be allowing pop-ups for everything. And then if you go back to print again, it'll work. And once you've done that one time, you're set from then on. You don't ever have to worry about that issue again unless you change your printer, your computer. And that is the end of my section. I'm going to pass you on now to the next speaker.
Thank you, Francis. Good morning. My name is Josh Baker, and I am representing the Office of Mental Health. Today I will be discussing general changes, highlights, and any specific changes for the Office of Mental Health. Any changes from the previous CFR manual are detailed in the recently released fiscal year CFR transmittal letter. The transmittal letter can be found on the SED link below. Please keep in mind when carrying forward changes to funding source codes or program codes, they may need to be updated. The next two slides highlight a list of internal controls provided by the New York State Office of Mental Health Bureau of Audit to assist you in providing and detecting fraud. A KMPG survey, fraud survey, found that organizations are reporting more experiences of fraud than in prior years, and that 3 out of 4 organizations have uncovered fraud. The New York State Office of Mental Health Bureau of Audit has provided the following list of internal controls to assist you in preventing and detecting fraud at your agency. The top 10 internal controls to prevent and detect fraud are number 1, use a system of checks and balances to ensure no one person has control over all parts of a financial transaction. 2, reconcile agency bank accounts every month. 3, restrict use of agency credit cards and verify all changes made to credit cards or accounts to ensure they were business related. 4, provide board of directors oversight of agency operations and management. 5, prepare all fiscal policies and procedures in writing and obtain board of directors approval. 6, ensure that agency assets such as vehicles, cell phones, equipment, and other agency resources are used only for official business. 7, protect petty cash funds and other cash funds. 8, protect checks against fraudulent use. 9, protect cash and check collections. And 10, avoid all or discourage related party transactions. The recordings of prior period CFR training presentations are available at the following YouTube links. Additionally, the current CFR training presentation will be added to the OPWD YouTube page at a later date. The written responses to the Q&A from the current CFR training presentation will be added to the OMH website at a date to be determined. These responses, as well as previous Q&As, can be found at the link below. Over the next few slides, we will discuss the general changes to the CFR manual. The COVID-19 and COVID-19S schedules have been discontinued for the 2023 calendar CFR and forward. Accordingly, Section 33B COVID-19 informational schedules and Section 33C COVID-19S informational schedules SED only have been removed from the table of contents and manual. Section 2 for submission requirements of the CFR manual was updated to include governmental entity CFR certification submission requirements were amended to remove the CFR II as an option, leaving the options of the CFR II and the compliance review. The combination submission matrix was updated to include Program 6350 Certified Community Behavioral Health Clinic. Section 8, General Instructions of the CFR Manual is updated to add an FAQ with instructions on how to report the New York State Healthcare and Mental Hygiene Worker Bonus Program funding on the CFR. This slide shows a screenshot of the FAQ regarding the Healthcare Worker Bonus Program. The FAQ provides guidance on how the Healthcare Worker Bonus is reported on the full and abbreviated CFRs. Please note, government entities are exempt from completing the CFR 2A and the reconciliation. As a result, they do not report the Healthcare Worker Bonus on the CFR. Additionally, the bonus is not reported on the Article 28 or mini abbreviated CFRs. The FAQ related to the Children and Family Treatment and Support Services programs was updated as follows. Effective January 1st, 2023, all CFTSS programs, regardless of designated agency, are to be reported on the CFR for the Department of Health. The CFRS web announcement list link was deleted from the CFRS web resources and general information table. Section 9, Getting Started, was updated to include the CFRS Web Assistant Contact Info was updated to recommend contacting the state agency with questions prior to contacting the help desk. A note was added that the Certified Financial Statement period start date and Certified Financial Statement period end date are required fields for not-for-profit and proprietary full and abbreviated CFR filers. Section 11, CFR-II, CFR-II-A of the CFR Manual revised the CFR-II and CFR-II-A schedules to remove OPWDD 5 from the attestation. Government entity CFR certification submission requirements were amended to remove the CFR-II as an option. The CFR-II header was amended to remove county government. The definition and data field on the CFR-II and CFR-II-A for CPA firm registered with New York State Education Department through date was added. A note was added regarding CPA firms that have enrolled in AICAPA peer review, but the peer review has not yet been completed on the CFR-II, CFR-II-A. The definition and data field on the CFR-II, CFR-II-A for last AICPA peer review acceptance date was added. The definition and data field on the CFR-II and CFR-II-A for the AICPA member number was added, and a graphic showing the AICPA website public file search was added. A note was added regarding the required CPA peer review and CPA registration with the State of Education Department. And the definition for CPA firm registration number was revised. Slide 246 shows the New York education law requiring accounting firms to undergo a peer review of the firm's test services within 18 months initially and every 3 years thereafter. Also, some helpful links are provided. Section 12, question 4 of on the CFR IV schedule is divided into 2 questions. A, submitted financial statements corresponding with the CFR reporting period or those with an end date within the CFR reporting period. B, submitted single audit in accordance with Title II CFR Part 200 Uniform Administrative Requirements, Cost Principles, and Audit Requirements for Federal Awards. This slide details Section 13 CFR1 Program Site Data of the CFR. The predefined entry on line 79, Federal Tax Credits COVID-19, was renamed Federal Tax Credits. And line 97, Provisions for Bad Debt Revenue Deduction, was renamed Reserved for Future Use. Section 19, CFR 6, Governing Board and Compensation Summary of the CFR Manual was updated to the CFR 6, Section 3 threshold to report all employees earning more than $125,000 was raised to report all employees earning more than $150,000. The CFR 6 Section 3 instructions were updated to require all individuals operating under a contract with a separate, related, or unrelated entity that would normally fall under the title code 601, 602, and 603 to be reported. A note was added to inform providers uploading a text file for CFR 6 Section 3 that any data for column 9 will require manual entry. Section 62, Appendix CC, Compliance Review, LGU only. An updated version of the compliance review has been added as an enterable schedule in the CFRS web. The following fields have been added. And then below, the following additional fields have been added as a fillable fields for the compliance review. Section 66 was updated for providers that are approved by New York State to operate an integrated outpatient services clinic or a certified community behavioral health clinic. It is necessary to allocate the integrated outpatient services in the certified community behavioral health clinic program revenues and expenses between the New York State agencies that issued the underlying operating certificates. The Integrated Outpatient Services Clinic is reported under Program Code 2100 for OMH, 3520 for OASIS, under Program 1580 for DOH, if DOH has provided one of the underlying certifications. Programs are required to maintain support documentation showing that they have complied with the required method of allocating revenues and costs. Beginning with the calendar year 2023 reporting period, the Certified Community Behavioral Health Clinic will be reported under Program Code 6350 as an OMH OASIS shared program. Refer to Section 8 for more information about reporting a shared program on the CFR. The Certified Community Behavioral Health Clinic program is reported in aggregate as Program 6350 on the core schedule CFR through DMH1 and allocated between OMH and OASIS state agencies on the claiming schedules DMH2 and DMH3 in accordance with methodology described below. The Certified Community Behavioral Health Clinic services are never allocated to DOH. The allocation methodology determines the allocation percentages by assigning each patient and their associated units of service during the reporting period to one of the categories listed below based on the diagnosis codes used for the patient over the course of the reporting period. In the case where as the patient's diagnosis codes during the reporting period apply to both OMH and OASIS, all units of service for that patient shall be shared equally between OMH and OASIS. Recipients and their associated units of service are to be allocated using the following four categories: OASIS only, OMH only, co-occurring, and DMH only. Under visits, report all visits during the reporting period for all recipients in each category. Any given recipient will fall into only one of the three categories. An Excel is available at the link on the slide. For the CCBHC, visits are counted on the unique patient daily visits for patients who receive CCBHC services. CCBHC service visits may be provided either directly from CCBHC staff or from a designated collaborating organization. If a patient receives services directly from a designated collaborating organization and the CCBHC on the same day, it shall only count as one visit. The results of the calculation should be 100%. The allocated units of service are reported on all applicable CFR schedules with the exception of the schedule OMH4. On schedule OMH4, the total units of service by payer is reported representative of the activities of the DIOS and the CCBHC clinic for the reporting period. CCBHCs should complete the claiming schedules via the DMH1 to DMH2 transfer function from the utilities menu. After the transfer is complete, you will be able to adjust the data if required. Further, you will need to enter the DMH2 line 28, the amount of net deficit funding, state aid for the respective state agencies. The ability to enter data on the date sign fields in the certification CFRI, CFRI II, CFR II, CFR III, and the CFR-IV have been removed. Instead, the certification should be signed on the document at the time of signing. For the shared program 6350, the site code field is divided into two separate fields, OASIS site code and OMH site code. As discussed yesterday, e-sign certifications must be uploaded through CFRS Web, and the checkbox attestation must be selected. This attestation will be provided during the upload stage of the CFR certification pages. E-sign certifications will not be accepted unless they are uploaded through CFRS Web. Below is the signature attestation for the certification pages found on CFRS Web. OMH supplementals, changes, and highlights. There are 4 supplemental schedules specific to OMH. Supplemental schedules OMH1, OMH2, OMH3, and OMH4, which we will discuss in more detail. The OMH1 schedule is used to report the total units of service by OMH program site. Providers can use Appendix F of the CFR manual to find units of service details for each OMH program. Units of service are very important to us. They are used to determine the cost per unit of service for financial planning. The units of service reported in OMH1 transfer to CFR1 and the DMH1 on the appropriate lines. The units of service on Schedule OMH1 must match the aggregate total of units of service reported on DMH3 for the same program. Pictured here is the OMH1 from the CFRS web. To report units of service, select the program and site from the drop-down boxes. This process will be repeated for each program. CFRS web will automatically save the data. Please keep in mind the OMH1 is only completed for OMH programs that file a full CFR. OMH2 Medicaid units of service by program site. The OMH2 is completed for program sites that occurred Medicaid fee-for-service or Medicaid managed care revenue and should be reported separately for each. The units of service reported for the Medicaid fee-for-service and the Medicaid managed care will transfer from the OMH2 schedule to the CFR1 on lines 13A and 13B respectively. Lastly, Medicaid units of service on the OMH2 should not be more than the Medicaid units of service reported on the OMH1. The next few slides include screenshots of the CFRs from CFR's web. The OMH2 Medicaid units of service is only completed for OMH programs that file a full CFR and have program sites eligible to bill Medicaid. The OMH2 schedule is set up similarly to the OMH1, except each line has an A and a B to track units of service separately for Medicaid fee-for-service revenues and Medicaid revenues received as part of Medicaid managed care. As you can see on this slide, each line has an A and a B side for each part. Here we can see the lines associated with day treatment on the OMH2. Lines include brief day, half day, full day, and collateral home and crisis visits. Lastly, we can see the lines for each crisis stabilization center and other residential. To delete a program from the OMH2 schedule, click the delete button pictured on the bottom left-hand side of the screen. When the delete button is clicked, the following box will appear. Clicking OK will delete the program, or click cancel to return to the screen. Schedule OMH3 client information. Enter the number of clients served by the program. This may differ from the number of admissions because a person can be admitted more than once. Caseload at the start of the current period should equal the caseload at the end of the prior period. Schedule OMH3 program without an ongoing caseload. The OMH3 captures the number of persons served by the program and site for the year. The beginning and ending numbers on lines 1 and 4 will be 0. Indicate the same number of persons served on line 2 and 3. These numbers will indicate how many people were seen and how many left. Here is an example of a program with an ongoing caseload. Here the numbers reported may vary. Schedule OMH4 units of service by payer by program site. This schedule must be completed for each OMH licensed mental health outpatient treatment and rehabilitative services and certified community behavioral health clinic program reported on a full CFR. Program site ID number, use the operating certificate number for the Motors program, use the OMH site code for the CCBHC program. The purpose of this schedule is to calculate safety net visits, which will be used in the calculation of the agency's safety net payment. The schedule captures units of service provided by payer and revenues earned for select payers. For the CCBHC, report the total visits and revenue for all services provided by the CCBHC. Schedule OMH4, units of service by payer by program site. The name of line 11 was changed to participant fees not including copays and deductibles. Section 2, Submission Requirements. OMH submission matrix and the combination submission matrix were updated to include the Certified Community Behavioral Health Clinic. Section 27, OMH4, units of service by payer by program site. The name of line 11 was changed to participant fees not including copays and deductibles, and the description was revised. The Certified Community Behavioral Health Clinic program code 6350 was added as a reportable program on this schedule. Use the OMH site code for the CCBHC program. Report the total visits and revenue for all services provided by the CCBHC. Section 39, Appendix F, has been updated with the following program codes were added to Appendix F. 1950 Safe Options Support Team, 4860 Intensive and Sustained Engagement Teams, 6350 Certified Community Behavioral Health Clinic, 8360 Individual Placement and Support Employment Initiatives. The following OMH program names and descriptions were revised. 2880 Residential Treatment Facility, Transitional Coordinator Community, Non-Licensed Program. The following OMH program descriptions were revised. 0680 Mobile Crisis Services, 0780 Specialty Mental Health Care Management, 1680 CPEP Crisis Outreach, 1920 CPEP Extended Observation Beds, 2680 Crisis Intervention, 2730 Health Home Care Management, 3130 CPEP Crisis Intervention, 4910 Children and Family Treatment and Support Services Mobile Crisis Intervention. The following codes were deleted: 2260 Children's HCBS Waiver Crisis Response, 2250 Children's HCBS Waiver Family Support, 2230 Children HCBS Waiver Individualized Care Coordination, 2280 Children HCBS Waiver Intensive Home and In-Home, 2270 Children's HCBS Waiver Skill Building, 2370 Children's HCBS Waiver Youth Peer Advocate. Beginning with the 2023 calendar year CFR, all children, family treatment, and support services programs are reported on the DOH CFR regardless of which New York State agency has designated the provider agency or which population is served. These programs include 4900 Family Peer Support Services, 4910 Mobile Crisis Intervention, 4920 Youth Peer Support, 4930 Psychosocial Rehabilitation, 4940 Other Licensed Practitioner, 4950 Community Psychiatric Support and Treatment. Section 47 Appendix N, the following funding source codes were added: 134J Adult Case Management, Critical Time Intervention. Section 66 Appendix GG, beginning with the calendar year 2023 reporting period, the Certified Community Behavioral Health Clinic will be reported under the program code 6350 as an OMH OASIS shared program. All CCBHC providers should follow the updated guidance in Appendix GG for reporting a CCBHC program on the CFR. The CCBHC is required to file a full CFR. When transferring the data from the DMH1 to DMH2, the calculated CFR allocation percentages of expenses and revenues for OMH and OASIS are entered as determined from the approved methodology. Additional notes about program code 6350 CCBHC. Units of service are reported in the Schedule CFR1. Schedules OMH1, OMH2, and the SUPP-1 are not required. OMH providers should continue to use MHPDs to submit corrections, openings, and closures of programs. The programs and sites reported on your CFR should match our concerts database. Attachment A is automatically generated and mailed with each desk review letter. It compares the programs listed in our database versus what you reported on your CFR. Any discrepancies must be resolved. And with that, this concludes my part of the training. I will now pass the mic to the next presenter. Thank you.
Good morning. My name is Nicole Malucci, and I will be discussing the Department of Health highlights and changes. All right, so for highlights, the program site identification number is going to be the first four digits of your agency code, followed by the first three digits of your program code. For units of service, Appendix HH provides the units of service measurement for each DOH program. Providers are responsible to confirm units of service are reported accurately in accordance with the program description in Appendix HH. I really want to emphasize how important it is to report units of service accurately. DOH uses the units of service to evaluate utilization and rate adequacy, so any inaccurate reporting influences our analyses. For children and family treatment and support services, beginning with the 2023 calendar year CFR, all CFTSS programs are reported under the DOH CFR, regardless of which New York State agency has designated the provider, agency, or which population is served. So this includes all CFTSS program codes, 4900, 4910, 4920, 4930, 4940, 4950. For the Integrated Outpatient Services Clinic, on the CFR, the IOS clinic is reported under program code 2100 for OMH, 3520 for OASIS, and 1580 for DOH. An allocation between OMH, OASIS, and DOH must be made if the provider operated both OMH and OASIS clinics prior to being designated as an IOS clinic. Programs are required to maintain support demonstrating they have used a reasonable method of allocating costs, and you can refer to Section 66, Appendix GG for further instructions. So for the changes, once again, the frequently asked question related to CFTSS reporting was updated to reflect that regardless of the designating agency, all CFTSS programs are reported on the CFR for the Department of Health. In Section 13, the CFR1 program site data, we added a predefined entry for line 94, other revenue, for ARPA workforce and infrastructure payments. This option will be available to the following DOH program codes: 2240, HCBS Consolidated Children's Waiver Planned Respite, 2350, Supported Employment, 2360, Pre-Vocational Services, 2380, Crisis Respite, 2390, Caregiver Family Advocacy and Support Services Level 1, 2400, Caregiver Family Advocacy and Support Services Level 2, 8100, Community Habilitation, and 8110, Day Habilitation. In Section 67, Appendix HH, DOH Program Types, Definitions, and Codes, we added all of the CFTSS program codes since reporting will now be under the Department of Health. So that includes 4900, Family Peer Support Services, 4910, Mobile Crisis Intervention, 4920, Youth Peer Support, 4930, Psychosocial Rehabilitation, 4940, Other Licensed Practitioner, 4950, Community Psychiatric Support and Treatment. We made some updates to some of our program names. So for Children and Youth HCBS Consolidated Waiver programs, we changed the name to HCBS Consolidated Children's Waiver. So that happened for 2240, Planned Respite, 2350, Supported Employment, 2360, Pre-Vocational Services, 2380, Crisis Respite, 2390, the Caregiver Family Advocacy and Support Services Level 1, 2400, which is the Level 2, 2500. These were the palliative care services. We added the HCBS Consolidated Children's Waiver to those as well. So there was pain and symptom management, expressive therapy, counseling and support services, massage therapy. We also made this change for community habilitation and day habilitation. We made modifications to two program descriptions, 2390, Caregiver Family Advocacy and Support Services Level 1, and 2400, which is the Level 2. We made changes to how the units of service are reported. Again, it's just super important to make sure that you're referring to Appendix HH to report your units of service correctly. So these changes were made for 2240, Planned Respite, 4900, Family Peer Support Services, 4910, Mobile Crisis Intervention, 4920, Youth Peer Support, 4930, Psychosocial Rehabilitation, 4940, Other Licensed Practitioner, 4950, Community Psychiatric Support and Treatment. This concludes the DOH section, and we will now take a 5-minute break.
Lisa Vickery from the Good morning, everyone. This is Lisa Vickery from the Office of Addiction Services and Supports. Today I will be going over OASIS highlights and changes. The due date for the 2023-2024 CFR financial statements and certifications is December 1st, 2024. Late submissions can be subject to various penalties and fines. Funded and non-funded providers should review the reporting requirements and potential sanctions for non-compliance at the links provided. Sanctions may include impositions of fines, withholding of advance payments, and ultimately termination of state aid. Suspension, limitation, or revocation of the operating certificate, and notification of noncompliance to DOH in the case of Medicaid providers. For assistance with issues or questions that may arise, contact information is listed for the Budget, CFR, FARU, and State Aid Claims Departments. A CFR submission is considered incomplete and a provider considered non-compliant until the required certification schedules and audited or reviewed financial statements are submitted. OASIS requires a new CFR-I, CFR-III, and CFR-IV to be submitted for each new DCN uploaded. Once the initial CFR-III is received for the reporting period, OASIS will accept an attestation reporting minor changes instead of an additional CFR-III unless significant changes to the financial statements are reported. We request that all signature pages be submitted electronically through CFRS Web and that providers keep the originals for the required retention period. OASIS will accept emailed PDF files of the certification schedules and attestation statements. They should be included in one PDF file and named as follows: your agency's 5-digit agency code, the period covered, DCN number, names of the cert schedules included in the PDF, and date filed. The subject line of the email should be as follows: agency code, period covered, certification schedules. The DCN on emailed PDF certification schedules must match the DCN of the uploaded CFR files and the original signature copies maintained in the provider files. OASIS uses the provider contact information contained in the Provider Directory System, or PDS, to distribute program and policy material and announce funding opportunities. To receive these important communications, your organization must keep your agency contact information up to date in the PDS. Please review this information to ensure its accuracy and completeness. Instructions can be found at the link provided. The OASIS-only submission matrix was updated to include providers that operate at least one certified and/or funded OASIS program and the new shared program 6350. The OASIS-only note regarding units of service reporting for CFR1, line 13, was modified to say, for OASIS treatment programs, the CFR's reporting of programs' units of service should be similar to the units of service reported by the entity to the OASIS Client Data System, CDS, through the Monthly Service Delivery Function, MSD, except when the reporting guidance varies. Refer to Appendix E for individual program CFR reporting requirements. The OASIS reporting guidelines for the total share of agency administration allocation was updated to include, per program, the amount reported on DMH2 line 11 cannot exceed the amount reported on DMH1 line 12. The OASIS-only instructions were updated for programs that receive state aid. For direct contract reporting, the total state share on DMH2 line 44 and the local government share on DMH2 line 45 should equal net operating costs on DMH2 line 43. For local contract reporting, please consult your county representative. The OASIS-only description was modified for DMH2 line 45. Report the amount of local government public funds that are considered maintenance of effort support of the net operating cost. Local government funds are funds raised by the county through a tax levy or other means. The OASIS-only instructions were updated for funded and non-funded programs for DMH2, line 48. Programs not receiving state aid should report the program deficit or surplus. Programs that receive state aid as a direct contract should not use line 48. Programs that receive state aid through a local contract should consult with their county representative regarding DMH2 line 48 reporting. A new program category, harm reduction, was added to the OASIS program table in Appendix E. The following OASIS programs were added to CFRS Web: 2900 Harm Reduction Services, 2950 Comprehensive Outpatient, 4037 Low Threshold Buprenorphine, 6350 Certified Community Behavioral Health Clinic. The following OASIS Children's HCBS waiver programs were deleted: 2230, 2250, 2260, 2270, 2280, and 2370. These programs should be reported on the DOH CFR. Refer to Appendix HH for the applicable program codes. Beginning with the 2023 calendar year CFR, all CFT-SS programs are reported on the DOH CFR regardless of which New York State agency has designated the provider agency or which population is served. The names of the following OASIS programs were updated as follows. 4045 is now Specialized Services Outpatient. 4055 is now Specialized Services Residential. The following DMH funding source code indexes were added: 013B for behavioral health parity, 013J for New York State Drug Treatment and Education for Adult Use Cannabis, 013T for opioid settlement, and 013W for opioid stewardship. An OASIS-only note was added to Appendix X, line 21, stating that professional credentialing and/or licensing fees to maintain qualified staff in OASIS programs are considered allowable costs in OASIS-funded programs. OASIS allows agency-paid employee licensing or credentialing fees for the purposes of workforce development and retention in addiction programming to be claimed for reimbursement. Starting in 2021, OASIS received 2 supplemental awards under the Substance Abuse Prevention and Treatment, or SAPT, block grant through CRF and ARPA, collectively referred to as Fiscal Year 21 SAPT Supplemental Grant Awards. Providers are required to report as follows. On the core, expenses on the CFR-1 are for direct costs and CFR-3 are for administrative costs. Revenue on the CFR-1, line 79, and DMH-1, line 25, federal grants. For claims reporting, report expenses in the respective categories, and report revenue on the DMH-2, line 24, as SAPT supplemental. Because the contract period for the SAPT supplemental grant funds does not coincide with the standard funding period, you will report the expenses and uses of the funds on the claiming schedules of the reporting period in which they occur. As a result, you may report expenses and revenues with the SAPT supplemental grant funds in more than one reporting period. State Opioid Response, or SOR, is a federal grant and is distributed through OASIS's fiscal agent, the Research Foundation for Mental Hygiene. SOR is awarded by the Department of Health and Human Services, which is an available line in the detail box for CFR-1, line 79, federal grants. Like the SAPT grant, the SOR grant should also be reported on DMH-1, line 25, and DMH-2, line 24. Opioid settlement funds. The provider agency should report the expenses of the award and the corresponding revenue in the appropriate OASIS program. This revenue should be reported as other revenue on CFR-1, line 94, and DMH-2, line 29, and identified as OSF. If a local government unit, city, or other litigating entities makes any awards of these funds to an OASIS provider for the purpose of providing substance use treatment, prevention, harm reduction, or recovery services, the revenue should be identified as local OSF. This revenue should not be reported on the DMH-2 line 45 as local government share. To ensure accuracy, the Fiscal Audit and Review Unit, or FARU, will perform on-site visits, and the CFR Review Unit will perform desk reviews of the CFR submissions. Any areas that need additional explanation or revision will be detailed in a CFR review emailed to the provider. Failure to respond to the review may lead to withholding of funding or revocation of certification. Accurate and complete CFR data for OASIS programs is critically important for OASIS fiscal policy development and analysis. Cost report data is also requested and used by other New York State agencies and the federal government for various purposes. The following are some examples of items covered in the review of the core reports. Are the CFR supporting documents completed and submitted as applicable, such as the certification schedules, financial statements, and parent agency administration allocation? Are all active programs reported? If applicable, have the units of service been reported on CFR-1 line 13? And are they similar to the units of service reported by the entity to the OASIS client data system through the monthly service delivery function? Does CFR-2, column 1, lines 7, 9, and 10 match the financials? If required, is the reconciliation completed? Is the CFR-2A completed? Is the CFR-3 completed? If line 38, parent agency allocation, is completed, has the allocation been submitted through CFRS Web? Are the non-allowable expenses reported on CFR-1, line 40, or CFR-3, line 17, adjusted out accordingly on CFR-1, line 66, or CFR-3, line 41? Are the hourly equivalents on the CFR-4 within reason? Hourly equivalents are arrived at by dividing the total amount paid by the total hours paid. Is CFR-5 completed, if applicable? Is CFR-6 completed? If so, is there an amount in column 9 that must be adjusted out on the CFR-3 line 41? Is the SUPP-1 completed, if applicable? Once the core reports are complete, if any of your programs are funded, select the DMH1 to DMH2 transfer button at the bottom left of the DMH1 screen to begin the creation of the claiming schedules. Transferring data from the DMH1 to the DMH2 is essential to avoid calculation errors and underreporting on the DMH2. If your agency receives state aid funding for any OASIS program, you must report all programs operated, funded or not, on the DMH2 and DMH3. If your agency does not operate any state aid funded programs, you are not required to complete the claiming schedules. After transferring the data, you can manually adjust the DMH2 if required. We would not expect DMH2 adjustments to be made in the reporting of personal services, fringe benefits, or OTPS expense categories unless there is also a change in the method of accounting. CFRS Web will not transfer vacation leave accruals from the core to the claim because they are considered non-reimbursable. Adjustments are allowed on the claim for the following: equipment and property, addition of an expensed item in the period it was purchased, and subtraction of a non-reimbursable expense such as depreciation expense, interest expense, real estate taxes, and mortgage expenses that were reported on the CFR-1 lines listed on the slide. CFRS Web includes drop-down detail boxes to list the adjustments from the core individually. Choose either a predefined line or select Add a Line. For each row of data, select either addition or subtraction to individually list the addition of a fully expensed item or the subtraction of a non-reimbursable expense item. The net amount of these program expenses will transfer to the respective DMH2 line 9 or DMH2 line 10. If the DMH1 to DMH2 transfer button is not used, these expenses may not calculate correctly. For a complete list of non-reimbursable expenses, refer to Section 21.3 of the CFR Manual. OASIS does not allow service providers to budget for or claim depreciation and/or interest expense for aid to localities or state aid reimbursement. OASIS requires a provider to fully expense all equipment and property purchases during the reporting period. DMH2, line 9, equipment includes the following predefined entries: depreciation vehicle, depreciation equipment, and interest vehicle. In this example, the gray worksheet box shows that the DMH1 equipment total of $13,805 was transferred to DMH2, line 9. The provider then used the drop-down box to add a line for the $10,000 copier purchase and subtracted $17,554 for equipment depreciation using the predefined line. The net amount populated for DMH2, line 9, is $6,251. DMH2, line 10, property, includes the following predefined entries: depreciation building, depreciation building and land improvement, mortgage and capital improvement interest, mortgage expenses, real estate taxes, and interest on capital indebtedness. In this example, the gray worksheet box shows that the DMH1 property total of $81,547 was transferred to DMH2, line 10. The provider then subtracted $80,235 for building depreciation on the predefined line. The net amount for DMH2, line 10, is $1,312. Administrative expenses reported on CFR 3 for the lines indicated in the screenshot must be prorated to determine the non-reimbursable OASIS portion to be adjusted out of the claim on DMH2, line 12, for each program. Refer to Section 21.3 of the CFR Manual for a complete list of non-reimbursable costs to be reported on the DMH2, line 12. The prorated share for each program is derived by dividing the program's total operating costs, CFR 1, line 64, by the total agency operating expense, CFR 3, line 53, multiplying the total non-reimbursable costs reported on the CFR 3 by the percentage calculated in Step 1, and report this amount on the DMH2, line 12 for this specific program. DMH2, line 12, is used to report adjustments to expenses and/or non-allowable costs and the prorated share of non-reimbursables from the CFR 3 agency administration expenses. Equipment and property adjustments should not be reported on this line. Early retirement incentive payments, or ERIP, and severance pay should be reported fully on the core reports and claim, then adjusted out of the claim on the DMH2, line 12. An expense considered non-reimbursable for a provider would also be considered non-reimbursable for a related party. Refer to Section 21.3 of the CFR Manual. Any depreciation expense or mortgage interest expense noted on CFR 5, Section 3, columns 4, 5, and possibly 8 which were used to validate the expense in Section B, may need to be adjusted out as non-reimbursable either fully or partially based on the source of the expense. And you can see both sections on the slide. Section B is on top, Section C is on the bottom. Once the CFR unit performs a desk review of the CFR submission, a review response is then required from your agency. If you agree with the findings, the CFR should be revised and validated. Please obtain a new DCN number and submit it in PDF format with your written response. Once we have confirmed the corrections were made, you will be asked to upload the CFR and submit the required certification pages and/or attestation. If you disagree with the findings, please provide an additional explanation along with supporting documentation and clarification of your position. Generally, 30 days or less is allowed for your response. This is the end of my section, and I will now hand it over to our next speaker.
Sorry about that. Hi, everyone. My name is Emily Seward from OPWDD, and I will cover all of the OPWDD specific highlights and changes. We are based here in Albany on Holland Ave. Starting with some units of service reporting highlights. To report supervised IRAs, please include the units to all billed therapeutic leave days and retainer days on CFR 1, line 13A. In short, for each unit of service, count one participant day, which includes units of service corresponding to all billed therapeutic leave days and retainer days. In order to report respite program 0311 and 0312, it is important to note that any per diem billing should be reported as 96 quarter-hour units. Instead of program type reporting, the following program codes require site-specific reporting: 0090, 0091, 0200, 02, 02, 0204, 0231, 0227, 1090, and 1091. In case you are having difficulty allocating site-specific expenses for those programs, a good starting point in the manual is Appendix J. If further direction is needed, please refer to Appendix J for programs 0090, 0092, 0094, 0095, 0203, 0204, 0205, 0227, 0231, and 1090. OPWDD has one of the strictest penalties if the CFR, financial statements, and certification pages are not uploaded by the due date. A financial penalty of 2% of Medicaid billing will be imposed until the end of the billing cycle, which will include the first of the month following compliance. Please note that these penalties will not be refunded after the agency comes into compliance. In the case that the provider does not submit the CFR in a timely manner, OPWDD may request that they voluntarily surrender program operating certificates. Not necessarily a new requirement, but a requirement that will be reviewed by OPWDD going forward. We will now be verifying that the CPA firm that audits the financial statements and certifies the CFR has registered with New York State and is compliant with the AICPA peer review program. New CPA firms must register with New York State first and then enroll in the peer review program within 30 days of the initial performance of attest services. Then the peer review must be done within 18 months. It is important as a provider to verify that your CPA firm meets these requirements. If OPWDD is made aware that a provider's CPA firm is not compliant, the provider will receive a 30-day penalty notice, giving them 30 days from the date of the letter to submit the documents showing compliance. If these documents are not submitted, a 2% penalty will be imposed on Medicaid payments. During OPWDD's initial CFR review, we will be pointing out potential issues, but ultimately it is the provider's responsibility to resubmit a corrected CFR along with certification. However, this does not apply to CFRs that do not have to submit a CFR II or CFR II. OPWDD requires CFRs to be submitted alongside a new certified CFR-I and CFR II, because only CPA certified CFRs will be used for calculation of OPWDD reimbursement levels or any initiative that uses the CFR as a basis of calculation of funds. Providers still may submit revised CFRs in response to another agency's request, but OPWDD will not accept them without a new certification. And this is just something to keep in mind going forward. If during the reporting period, any funding for the residential reserve for replacement programs was used, program codes 0294, 0297, and 0298 must be added to the CFR. If these programs are not utilized for RRR programs, the funds could be put at risk. On this slide, we will review how to report the Workforce Stabilization Initiative. Any revenue for the Workforce Stabilization Initiative must be reported on CFR-1, line 94, Other. There are predefined lines to use for Phase 1, which is for title codes in the 200s, and then Phase 2, which is for the title codes in the 100s and 300s. Workforce Stabilization personal service costs are to be reported on CFR-1, line 16, and contracted services are to be reported on CFR-1, line 35. Any totals from line 16 and line 35 must also be reported on line 68F, which is for title codes in the 200s, or line 68H for title codes in the 100s or 300s. Workforce Stabilization fringe benefit costs reported on CFR-1, line 18, must also be reported on CFR-1, line 68G for title codes in the 200s, or line 68H for title codes in the 100s or 300s. Lines 68A through 68I are informational only. OPWDD programs that require a DMH2 and DMH3 should not include revenue or expenses from workforce stabilization. Any difference in expense from DMH1 to the claiming schedules should be reported as an expense variance. Please enter as workforce stabilization payments on the explanation of variance line. And here is a screenshot of the OPWDD supplemental section on CFR-1. It is important to differentiate that line 68F and G are for Phase 1 of workforce stabilization, and line 68H and I are for Phase 2. To receive funding for transportation costs for day treatment, day hab, or pre-bob programs, those expenses must be listed in detail in either Program 0670 or 0880. Then this expense should be allocated back to the day treatment, day hab, and or pre-bob program site on CFR-1, line 68B. Failure to report these costs on 68B could result in a significant rate cut in the future. Line 68B should also be tested by your CPA firm in their audit testing of your CFR. CFR-1, line 68A is to be used for transportation expenses other than to or from home and site. Line 68D is used to report the amount that is directly associated with program administration property that was also reported on CFR 1, line 63. Total property provider paid. Line 63 is the sum of lines 49 through 62 on CFR 1. Line 68E is to report the total billed to Medicaid by the agency plus what is billed to Medicaid by any other agency for services provided. This line must be utilized for any agency operating an ICF. This slide is a refresher. As stated before, line 68F should be used for expenses related to phase 1 of the workforce stabilization and what was included in CFR 1, line 16, and line 35 for personal service expenses. Line 68G should be used for the fringe benefits that were reported on CFR 1, line 18, related to phase 1 of the workforce stabilization. Here's another refresher slide. So line 68H should be used for any personal service expenses that were listed on CFR 1, line 16, and line 35, but only those related to phase 2 of the workforce stabilization. Line 68I should be used for any fringe benefits related to phase 2 of the workforce stabilization that was also included on CFR 1, line 18. For any provider operating an ICF that also provides day services for ICF residents, including ICF staff, then report these services under program code 0093, which is in-home services for individuals residing in an ICF. It is very common for the only expense in program 0093 in these cases to be staff personal services and benefits, which would then have to be allocated. The OPWDD1 schedule is used to report services and supplies provided within ICF or IID programs, which are program codes 0090 and 1090, operated by OPWDD funded service providers. A separate schedule must be completed for each site. It is a requirement that the operating certificate number be used as the site code on OPWDD1 for codes 0090 and 1090. If medical supplies, line 6, is reported in either column 2 or 3, then OPWDD2 must be filled out for that site. As stated in the last slide, if line 6, medical supplies, of column 2 or 3 was completed in OPWDD1, then that site has to complete the OPWDD2 supplemental schedule. Similarly, site reporting is required. To complete this schedule, simply check the box next to each medical supply listed that was included in the cost reported on OPWDD1, line 6, other medical supplies. And to conclude the OPWDD section, you will be happy to hear that the OPWDD5 schedule is no longer required and has been removed from the CFR manual and CFRS web going forward. And with that, I will pass it off to the next speaker.
Hello, everyone. I am Ian Hobbs from SED Rate Setting Unit, and I will be talking about the SED-specific supplemental schedules, highlight supplementals, and changes. Before I start, I'm seeing a lot of people that can't see. Do we want to pause it and fix the issue? Okay, looks like they're seeing it now. Okay, I'll continue. All right, for SED specific providers, financial information submitted within 90 days of January 1st for fiscal year filers, or within 90 days of July 1st for calendar year filers, the interest expense on working capital loans will be reimbursed on a prorated basis. If submissions are received more than 90 days from the specific dates, no interest will be reimbursed. The interest expense I'm referring to is the amount reported on CFR 3 line 12. The portion of the penalty will affect the tuition rates for the rate year 2 years after the report year associated with the financial information, and will apply to all tuition rates for that year. As a reminder, this specific late filing penalty is for SED programs only, and the other state agencies will have their own penalties. This is the website address for the rate setting unit. Here you'll find useful information like certified tuition rates, regional average rates, including one-to-one related service and SEEIT, rate methodology letters, links to the CFR manuals and forms, reimbursable cost manuals, which define what is and what's not reimbursable for SED reporting, the SED4 and RS2 worksheets, links to CFR web and rules and regulations. It also includes a link to RSU's rate setting application called SEDFIN, which is the portal used to view reconciled and prospective tuition rates. SED has two supplemental schedules, the SED1 for enrollment and classroom data, and the SED4 for related service efficiency reporting. The SED1 is required by all service providers, requiring a tuition rate for both school age and preschool programs, and also for infant programs. The first portion of the SED1 is used to report student enrollment data by program, by full-time equivalent, or FTE. You must report FTE totals in the appropriate funding source on lines 100 through 107. Report the total days the program operated on line 109. The enrollment figures should align with the tuition revenues reported on Schedule CFR1, lines 69, 88 through 92, and or line 94. Enrollment is to be reported on an FTE basis. A student is considered full-time or 1 FTE unless admitted after the start of the school year or discharged before the end of the school year, or is determined illegally absent. We have a definition of an illegal absence in our reimbursable costs manual in section 7 and in the CFR manual section 32A. FTEs are calculated based upon weeks enrolled divided by the number of weeks the program is in session. FTEs are also prorated when a student is in a program that operates less than 5 hours. This is calculated by the number of hours in the program divided by 5. Care days are used to calculate a per day tuition rate, which is used in the rate setting methodology. Care days equal the FTEs times the session days. The CFR manual has more examples of FTE calculations. If you have students that require one-to-one aid, the FTEs and associated costs should be reported in program 9230 and in the program the student is enrolled in. The bottom portion of the SED1 is used to capture the classroom information. Here you will report the approved classroom ratios, the number of classrooms operated, and the corresponding FTEs for that ratio and classroom. Only ratios that have been approved by the Office of Special Education can be accepted during the rate setting process. If you operate a special class in an integrated setting, only report the ratios approved for special education, not the overall general education ratio. For example, if the overall ratio is 15:1 to 2, but the special ed ratio is 7:1 to 1, you would report the 7:1 to 1 ratio on the SED1. If you operate a special education itinerant services, also known as CS or SEIT, you should report the mandated units of service on line 111 and the actual units of service provided on line 115. The mandated units should align with the units of service reported on line 13 of CFR 1. Units of service are reported on a half-hour basis and should be reported on a per session basis. Mandated units should be reported by county in the appropriate program in the student's IEP and which could be individual or group. Here's an example of a completed SED1 from the CFR web print version. And you'll notice that each program is separated out by summer and school year. May operate both one or the other. There's another example just showing a few more programs. You'll see the one-to-one aid section on the far right separated out from the program. This is just an example of what a calendar filer SED1 would look like, not really applicable to fiscal filing. The SED4 is used to capture related service data and measure the efficiency of the related service being provided. It's broken down into 3 sections: capacity, need, and productivity. The capacity is the half-hour sessions the school is able to provide based on their school hours and staffing allocation. Need is based on the mandated requirements per the student's IEP, and productivity calculates the percentage of related services provided versus the capacity. The SED4 is required for all rate-based programs except SEIT programs. The RS2 does not need to be filed with SED. It's only used as a guide for reporting on the SED4. An Excel version can be found on the RSU website under Manuals and Forms. The FTEs reported on the SED4 should reconcile to the FTEs reported on CFR4. So the SED4 FTEs should match CFR4 for the appropriate related service titles. This is an example of a completed SED4 in print version. Data from the RS2 is used to formulate the data reported on the SED4. Instructions for the RS2 can be found on the rate setting website under manuals and forms. Be sure to separate the RS2 by each related service type. The RS2 has a new column, which is column 13, labeled Annual IEP Mandated Related Service Sessions Not Provided Due to Telepractice Accessibility Issues. And that concludes the SED Supplemental Schedules section, so I will pass it to the next presenter. Thank you.
Hi, this is Paul Green from the Office of Addiction Services and Supports. Just quickly, I apologize for any technical error we might have had with the webinar. It appears to be working well for most, but if you did have a problem, one thing to consider is prior to this training day, we sent out a handout, which includes, it's a PDF version of the screenshots as well as the speaker notes. So you should have a copy of that handout in your email box. If for some reason you didn't get it, send us an email after this and I will forward it to you again. So again, there is a handout which includes all the information that's being presented. You're also going to be able to see this on YouTube in another week or so. All right, the SUPP-1 upper payment limit. The SUPP-1 schedule collects data for use in the upper payment limit calculations. UPL is a federal limit placed on fee-for-service reimbursement of Medicaid providers. Hospitals and federally qualified health centers are exempt from completing the SUPP-1. All other OMH, OASIS, and OPWDD providers who complete a full CFR and operate any of the following program types must complete the SUPP-1. So OASIS has 4 programs, OMH has a few programs, and OPWDD has a couple programs. Providers who fail to submit the CFRs or submit inaccurate or incomplete information may lose any supplemental UPL payments they would otherwise be entitled to. This is a screenshot of CFRS Web where you fill in the information. So first of all, you have to answer the question whether you're a hospital or a federally qualified health center. Next, you fill in which program it is and what site it is. And then there's 4 columns of information. If you fill in columns 1, 2, and 4, column 3 will calculate automatically. These numbers that you're putting in for total visits should generally match the CFR-1, line 13, A, B, and C. So keep that in mind when you're completing this. The big thing to know about visits are their threshold visits. But for the purpose of the schedule, a visit is defined as including all services provided to a patient on the same day. So in other words, if a patient came in the morning for a session and then came back in the afternoon for a group session, that would still only be one visit. Okay? You can't have more than one visit in a day. I'm not going to go into the rest of this. You can read the rest of this at your leisure. The next thing to think about here is under OASIS, opioid treatment programs, APGs. There may be many visits, but there's only one weekly claim. So again, it's not based on the claim, it's based on the visits. So you have to keep track of the patient visits during the week. But down at the bottom paragraph, it talked about bundles, and that's the only scenario where it actually goes by the weekly claim, not by the multiple visits. So there's more to be said about this in the manual. If you have any questions, you can also contact us directly. Okay, the remainder of this presentation is directed towards agencies that submit a claiming document, DMH2 and DMH3. If your agency does not, then you may leave at this time. Agencies that file a claiming document include those receiving state aid, local aid in the form of net deficit funding. Agencies that do not file a claiming document include OASIS, OMH, OPWDD providers that do not receive any state aid for any programs, and SED and DOH providers. So SED and DOH providers do not receive any state aid. They can leave at this time. If you are leaving, please fill out the survey. If you do not know whether you receive state aid, you're newer to the agency and you're just not sure, just stay on the line. It's only going to be another 20 minutes and it'll go quick. Okay? Budget modifications. If you haven't done so already, compare your projected expenses and revenues to your approved budget now. If it appears a modification to your approved budget is required, consult the funding New York State agency for guidance. Better to be proactive on these things. So, you've completed the core reports, the CFR1 through the DMH1. And as Emily concluded yesterday, you've gone to this screen, you've gone to the DMH1, and the DMH1 is a summary of the programs that you've reported. Well, now that summary is going to be transferred to the DMH2, and down on the bottom left is the yellow button she was looking for. There it is. When you click on that, it will give you this screen where you pick which programs to send and which county you wish to send them to and in what percentage you wish to send them to. So Francis mentioned something that was interesting. If you are OASIS or OMH and you have state aid from any one of these programs, then you have to report all those programs on the claim, okay? But like OPWDD only wants the programs that receive state aid reported on their claim. So for OPWDD, you would just select the programs that receive state aid and you'd send them over. For OASIS, you would select either all the programs or if possibly, if some programs are in different counties, you would select some programs, send them to one county, and then come back and select the remaining programs and send them to a different county. Okay. Sometimes you would send them in different percentages. Maybe not too often, but once in a while I'll get a provider from Warren, Washington County up north, and maybe they'll actually share the program. They'll have they'll send 50% to the claim for Washington County and 50% to Warren County. So just so you know, you can split it up percentage-wise if you're looking to, but generally it's going to be 100% to one county. All right, here it's saying that there's already information on the DMH2 for these. Do you wish to override it? And the answer is yes, you do. You always want to be updating it with the most recent information. All right, now it's saying that it's successfully transferred, but you have to note that some of the drop-down detail box information is not carried over. So the total carries over for Medicaid fee-for-service. The 275 populates the line, but you have to click into the drop-down box and you have to type in base Medicaid and put in the value in order for the drop-down box to match the line 17A. Okay. Don't worry, if you forget to do this, it'll remind you during final validations. Okay. Now you're at the DMH2, you're beginning it. First thing to do, you've got your state agency, you've got your county, you've got your program. If you want to get to the most used counties, the most recently used counties, you click on this asterisk and it'll bring New York up to the top of the list, okay? If not, if you don't click on it, it'll start with Albany and go alphabetical. Now, down here, contract type, direct contract or local contract. So direct this is going to be more and more important as time goes on because we're going to be making some changes that will affect this. But direct contract means that the money comes directly from the state of New York. Local contract means the money came from New York, the state of New York, went to the local government unit, and then was given to the provider. Okay. Direct contract almost always starts with a C00. Sometimes there's some differences, but usually it's C00. Local contract could be anything. It could be New York, it could be NY 4329 and such. So anyways, it's important to know which it is, and you have to enter that on line 2, and you have to select the accounting method on line 1. You can have the choice between accrual, modified accrual, or cash basis. Generally, you would do the same that you did last year. If you're changing from a year to another year, you have to get somebody's permission to do so. You can't just do it on a whim. Here's your expenses, your personal services, vacation leave, OTPS, and such. We would not expect these numbers to change. That's why you're transferring them, and they're the same numbers on the DMH-1 that they are on a 2. So some categories we would not expect them to change. Other categories we would expect them to change. So personal service should stay the same. However, vacation leave accruals is going to change because OASIS does not reimburse for vacation leave accruals. So whatever number was on the DMH-1 has become a 0 on the DMH-2. Fringe benefits and OTPS have stayed the same. Equipment property will change. Now, there's a drop-down box for OASIS. There is not one for OMH or OPWDD, but and we've already discussed the drop-down box. That's where you make the adjusting entries to remove depreciation and interest and to add back the expense of the equipment. Because the big difference between this claim, what we're working on, and the core is the expensing of the purchases. Okay, if you purchase a $30,000 computer or printer or some other equipment, you want to be reimbursed for that full amount. So you want to go in here and add the $30,000 printer. However, you have to subtract the amount that was transferred over that you were depreciating that equipment for. So you were depreciating it for maybe $3,000 for 10 years. Well, you have to subtract the $3,000 and add the $30,000, and that way your claim matches what you were fronted for at the beginning of the season. So this is the big difference between the claim and the core, is the handling of equipment and property. Okay. Agency administration, again, that for OASIS and OPWDD, we would not expect that to change from the DMH-1 to the DMH-2. However, OMH gives a little leeway on things like that. This is the revenue section of the DMH-2, participant fees, Medicaid fee for service, managed care, other third parties. Next is adjustments to revenue. We do not expect too much in the line of adjustments to revenue. You can refer to sections 22 of the manual for additional information on that. Also, here is line 28, net deficit funding, state and local government funding. So that's the money that you received in either a direct contract or a local contract. And this is important. Sometimes people miss this on a DMH-2, but they need to add that there, okay? Total gross revenue is all the revenue you received. The Medicaid, the other, and then the net deficit funding, okay? I'm sorry, here's your GAAP adjustments and non-GAAP adjustments. And again, Section 22 can give you more information about it, but we do not generally see a lot of adjustments. Okay. So what you do is you figure out your net operating cost. Net operating cost is your total expenses less your net revenues. Net revenues are all the revenues you receive except for your state aid. Okay? So if you had $1 million of cost of expenses and you had $600,000 of other than state aid, so it would be $1 million minus 600, so you'd have a $400,000 net operating cost. Okay, that'll be line 43. That'll be what you're trying to match here, because this is your deficit funding tab from it's lines 44 to 49, and 49 must equal line 43. Okay. So there's some details. I'm just going to read them to you a little bit here. Again, it's in the handout. Line 44 is equal to state share. Line 45 is for county tax dollars. So some people get this wrong. Some people think that local government share is the amount that comes from the local government unit, but that's not true. State share is your direct contract and your local contracts. Okay. Local government share is money that comes from the county tax dollars. So that didn't originate from the state of New York. That came right from the city's coffers. Okay. For OASIS, for funded programs with a direct contract, the total of state share, line 44, and local government share, line 45, should equal net operating cost, line 43. For funded programs with a local contract, consult your county representative. So OASIS pretty much wants line 44 to match line 43. The only other place you can put something in this report would be a line 48, and sometimes that comes back to bite you. Sometimes that ends up confusing the process in the claiming, and sometimes that ends up costing you money. So I'm going to tell you right now, for OASIS providers, your best bet is line 44 should equal line 43. The only reason you would do it any different is if it was not a direct contract, if it was a local contract and the county told you to do it differently. Okay. But for direct contracts, I definitely say line 44 should equal line 43. And I would almost say that's for most local contracts unless the county says differently. Line 46, provider's voluntary contribution. OASIS program line not enterable. Line 47 is subtotal. Line 48 for non-funded. Okay. OASIS non-funded programs report the program deficit positive or surplus negative. Funded programs with a direct contract should not use line 48. Funded programs with a local contract should consult their county representative. Okay. OMH, line 48. This is a surplus of deficit or funding over expenses. DMH2, line 43, less line 47. OPWD, indicate the amount of all other funding used to support the net operating costs, which does not fall into lines 44 through 47 above. So finally, line 49, total deficit must match line 43 in order to advance. If you get confused with this, feel free to give us a call. I know it is a little confusing, but nonetheless. The last tab is expense variance. Expense variance is an explanation as to why the number on the DMH1 is different from the DMH2. Okay, as I said, we wouldn't expect the numbers to differ in some categories, but in other categories we would expect it to. For instance, this one says for vacation leave accrual is non-reimbursable, so that makes sense. It's on the DMH1, but it's not on the DMH2. Okay, so all you're writing here is a quick phrase or a quick one line explaining what the difference is. Adjusted for equipment purchase, remove depreciation, something to that effect. You don't have to write a paragraph. Finally, if you forget to do this, you're going to get this red error code saying that this is necessary, and I don't believe it'll allow you to validate unless you do this. So keep that in mind. Okay. bottom left corner of the screen is change county, define DMH only program, and delete. Okay. Change county, if for some reason the program moved from the city to Long Island, this is how you would do that. You would click on the program, you click on change county, it says what's the new county, you would select the new county, you hit update county, and it's done. It's the easiest way to do things. If you don't want to do it this way, you'd have to delete the DMH2 and go and transfer over and transfer it again to a different county, but you run the risk of confusing things. So you're better off just using this change county. Define a DMH only. That was already discussed. Again, this is kind of something that never really comes up, although I have a feeling it's going to come up with this program 6350 in the next this reporting period. So define a DMH only. So you only have one column of data on your claim for this program because that's how many, you had only one PRU or one site code for that program. So you only have one column of data. However, somebody tells you that they want this data reported under 2 columns of information, or 3 columns, or 4 columns. Well, this is how you would do it. You would click on the program, and then you would say define a DMH only program. It would say enter a new index code, and then you would create a new column. Okay, so now you have column 2050, index code 05, and you have to complete it like you did before, direct contractor, local contract, accounting method, state contract number. But then you could put in expenses. You could put in $50,000 of expenses, and you can put in revenues if you want. So you're taking one column and you're splitting it into 2. The only thing to remember here is that you have to go back to the first column and remove that $50,000 of expenses, because if the 2 columns together should total up into 1. Okay. The reason I think this is going to happen for the 6350 for Oasis, I'm only talking about Oasis at this point, but if you had several different sites that are 6350s, but we only give you one PRU number, so you're going to roll them all up into one PRU number on the core reports on the CFR1 through the DMH1, and then you're going to transfer it over to the claim as one column, but I think then they're going to want you to report by site specific. So then you're going to break it out into maybe 2 columns or 3 columns by using this added define a DMH only. Okay. So this was only discussed recently, so we'll know a little bit more about it in the future. If you have any questions on it, feel free to give me a call and we can discuss it. The rest of you, if you never have to use a DMH, define a DMH only, that's fine, but just know that it's there in case somebody tells you, somebody from the county or somebody tells you, hey, I want this split out into 2 columns. Know that it's there, okay? If you want to edit this, you edit it from the program site definition screen, okay? So you created it from the DMH2 screen, but you edit it from the program site definition screen. And the final button was the delete button. To delete a DMH2, all you have to do is get to the DMH2, you click on the delete button, it'll give you a warning. Once you approve the warning, it'll delete the DMH2. Worst case scenario, you just go back to the transfer and transfer it again. Okay, so it's not earth-shattering if you delete it. DMH2 is completed on a New York State agency and county specific basis. The method of accounting must be indicated over each column containing fiscal data and can be reported on a full accrual, modified accrual, or cash basis. Direct or local contract type must be selected and the program number must be entered. So I did say it, if any of the OMH programs or OASIS programs have state aid, then all the programs need to be reported on the claim. Okay. For OASIS, If none of the programs have state aid, then a DMH2, DMH3 is not necessary to be completed. Okay, so we only want a claim if you have state aid. Direct contracts generally start with a C0. If there is no local contract, enter the first 7 letters of the county name, which in this case would be New York with no space. Agency administration is distributed between New York State agencies using ratio value. OASIS and OPWDD expect you to be using the ratio value on the claim. Equipment may be expensed rather than depreciated. Equipment cost of $5,000 or more per unit having a useful life of 2 or more years must be reported on line 9. Additional details required in reporting revenue on the other lines. All right. So line detail boxes, 17A, Medicaid, federal grants, and state grants, and other. So state grants are any funds that you get from a state agency other than the CFR reporting agencies. Okay. If you got the money from the CFR reporting agencies, then that would be net deficit funding. Federal grants are what we've been seeing a lot of lately. They're received from a federal government, even though they came through the state agencies. So that would be SAPT grants and such. If the federal grants or the state grants, for that matter, are not for one of these programs, okay, this is only for reporting the revenue that's involved in these programs. If it's not, if it came in for another program, then that should be reported in the CFR2, column 9, other programs. And you got to remember to complete the drop-down detail boxes when you're transferring to the DMH2. So last thing about the DMH2 is if I do send you an email asking you to make some changes and you go back to the CFR1 and you adjust out $5,000 of lobbying fees that you paid, and I said they're non-allowable. All right, so that's going to change the core report. And it's going to change everything involved in the core report, such as agency admin and such. But it's not going to affect the claim because the claim is not tied to the core. So you would then have to go back and automatically, you would have to go back and transfer the numbers back to the claim again so that the claim, the new claim, will have the new numbers, okay? So you got to remember, every time you make a change to the core, it does not automatically update the claim. Okay. Finally is a DMH3. DMH3 is funding source code. It's all about where the money came from, which funding source code. There should be one DMH3 for each DMH2. You start by selecting the agency, the county. Again, use the asterisk to get the most popular counties to the top. And you select the program. And then you select the funding source code. Next to that is direct contract or local contract. This is probably pre-populated, but in case it's wrong, keep an eye on it. So the information on the DMH3 needs to pretty much match the information on the DMH2. So sometimes it'll say direct contract was on the DMH3, on the DMH2, and local is on the DMH3, and you have to fix that, okay? Then you go down to number of persons served, number of units of service, and total adjusted expenses. Sometimes there is not an answer for number of persons served or number of units of service. If there is, it's in Appendix E, F, and G. Okay, so you can check there. If you want to change a county, this is where you'd use a change county again. Okay. If you want to change a funding source, you click on this to change the funding source. Again, if you don't change the funding source this way, If you just go back and click on it and create a new one, then you're going to have a duplicate one, and that could create problems. And finally, delete a funding source. You can do that from here, or you can go back to the menu and delete a funding source. This is an example of more than one funding source for one program. This program, number of units of service, line 11, is 8,800. Over to the right, program totals by county says that there's 10,800. So there's 2,000 units of service that must be reported somewhere else. So keep that in mind. If you see that this doesn't match this, if the left doesn't match the right, then you must have another funding source code. And this is the second funding source code. And this is the second 2,000, and now it makes sense that you have 10,800 units of service, okay? So that's what the far right is. It's a running total of all the left columns for that program. And this says that the DMH3 must equal the DMH2. If it doesn't, you're going to get these red error codes. So in this case, program for total expenses, program totals for total adjusted expenses, line 12, 791,000 must equal DMH2, line 13, 771,000. So I just incorrectly put in the wrong number, so now I have to put in the correct number, and when I do that, error code will go away, okay? So the DMH3, all you have to do is follow what it tells you to do. If it tells you it's a wrong number, it's just a wrong number. Put the right number in, and you're good to go. The only other thing that you will see, and we get it a bunch of times, is it'll say you've chosen the wrong contract type on the DMH3, and you say, no, I chose the right thing, and I put in the right contract number. I know it's right. I know it's right. I'll tell you what the problem is. You have an extra funding source code that needs to be deleted. Okay, so keep that in mind. If you ever have problems validating with a DMH3, first thing you should do is go check your funding source codes and see if an extra funding source code rolled over from last year that's not being used and it's creating a problem. All right, that'll save you a little bit of time someday. All right, in summary, for OASIS and OMH, the contract number and type indicated for each program on the DMH2 will be transferred to the DMH3. For OPWDD, at least one contract number and type, state or local combination indicated for each program on a DMH3 must match the information indicated for the program on a DMH2. DMH3 is completed on a New York State agency and county-specific basis. Funding source codes are found in Appendix N of the CFR. Contract numbers must be entered. Contract type must be designated state or local. For each funding source, enter this information. Again, you may not know the person served per year or units of service. If you don't, refer back to Appendix E, and that may help you, E, F, and G. But the total expenses and total revenue, net revenue, and net operating costs, you will not be able to validate without completing those. So those have to be completed in there. And this is just a summary of saying that the expenses, total expenses less than net revenue, which is all revenue except for state aid, equals your net operating cost. Okay, that is all for me. I will pass the microphone back to the host.
Thank you, Paul. Help function. When in doubt, use the help function. We believe this is a useful tool. Within the menu function at the bottom, you can find the help icon. A PDF file within the with the help contents will open in a separate browser tab. You can also click on the help icon next to the schedule name. A PDF file specific to the schedule will open in a separate browser tab. Thank you once again for participating in the CFR training webinar for the fiscal 2023-24 Consolidated Fiscal Report. In case you missed the beginning of the webinar, please take the time to fill out the post survey after you leave the event. It will help us make this training better. This webinar has been recorded and will be posted online shortly. An email will be sent out notifying you of the location. The Q&A will be carefully reviewed and the answer will be posted online as soon as possible. This concludes second CFR training session. Thank you.